Welcome to NBI.com. This is John's report is for the 27th. Well, uh, nice move for the market there on, easing international tensions. Obviously, the turnaround from Trump position on Minnesota that seems to increase the likelihood that maybe the budget will pass, that he's looking for a compromise there. So he's pulled the Border Patrol individual from that area. That doesn't seem like a big deal, but actually it's quite a big shift. And that means that, the threat of that not passing from a budgetary standpoint could be averted. That's a positive for the market. They see that as a big win because it's just huge spending. So, the more spending they can get approved, the happier they are. And so, from an NQ standpoint, you can see the positioning very different from the turnaround crossover point and much stronger. So, the Nasdaq now beginning to turn around and start to lead where the S&P has already outpaced it. Though prior, when we look at it back from October, that the Nasdaq had way outperformed. So it's a matter of balancing. But when you look at it from the NBI readings, that you can see a clear strength that the Nasdaq's expressive for that. The problem is still negative shakeout. So whatever we get from this, it's still relatively weak if we don't get a push above the zero line. So the fact that you're just not seeing any fade within, short strength in this case, also is an indication that it's very weak from a buy standpoint, and any disruption to it is going to lead to significant decline. So that's the caveat to what we're seeing from the rise on this. Any expressed weakness here from the magenta in that, it's problematic. So just keep that one in mind. It's not a runaway long by any means at this particular stage. It's all congruent, and we go with what is, but you just also have to be prepared for what the contingencies are should things shift at all. From a Treasury standpoint, again, the Fed sidelined just because of the whole turmoil transition. They're not going to be cooperative, but here's your real problem is right here. It's oil, and it's remained that way for quite some time. And as long as it's at this level, you throw in the winter storm, and it obviously impacted some things, but it's going to have a bigger impact on GDP. The exact opposite. Though we find that after storms, usually you get some kind of a boost post storm effect. The Euro's been still very excited by all of the U.S. turmoil. They think that everybody is going to be gravitating to them, though we still haven't figured out why. This is just a coordinated global effort to support these. I mean, you're starting to see it. I mean, everyone, was telling me how I was, crazy that it existed, that, you'd have these coordinated efforts, but look at what's happening now with the Japanese yet. A global, unified involvement to prop it up. And that's exactly what you see from the euro because on their own, there's no justification for these. And this is the manipulations within the market that has finally reacted in what you see from these commodities. And we look at gold here. Through the roof. I mean, all positive extremes. So, yes, we will get a fill back, just not yet. That's going to take you back into the 46. And when it happens, it'll be, the death of gold, blah, 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 blah. You're still going to be at a higher baseline. The reality is when you get this kind of a momentum shift run, this is all delayed from where we had the inflation pump. It was interesting because during the whole rise of inflation, gold really wasn't moving a whole lot. And then once it stopped, and the devaluation was realized, that's when gold started to make its move, and that took place back over here from the September buy situation that we had. From this one at 3,400, but it's like my brother was talking to me the other day, and he was like, "You told me to buy at 400 that it was going to," and I'm like, "Yeah, I did," but I also told people to buy Bitcoin when it was 4,000, 6,000, when it get to 16, to sell, buy back again at 8, again, the rise to 30 something, sell 64. We've been down this road plenty of times. You can go back and look at the record. It's not hard to see. It's fairly clear from our charts exactly when these buy setups develop and when the cool off periods are, and just a matter of following it from there. It's not all that complicated. It just depends on how active you want to be and what time frame chart you look at. We could have flipped that to a weekly and been the same thing. And then people say, well, why isn't Bitcoin in that operating under the same thing? Because it's not relatively the exact same concept. It's far more liquid situation. Gold is one of those things that's a buy and a hold against long-term devaluation, which is what you get from the inflation. From a Bitcoin standpoint, it's more of an active, movable trade where you park money interim, and it's a lot more liquid, and you can just come in and out of it as you need to. You store your money, you're outside of any currency. Before it was either you'd go into treasuries or you'd go into the yen or you'd go into the euro. It's just not as effective anymore. It's easier to have something like a Bitcoin, and that where you can just slide in and out of in between. Not to mention you get the delta of it. So what we saw here from the 50K was the futures filling all the way down uh, to the midpoint of the giant early breakup that took place back on the 21st. And from there, that fills it all in, bought back immediately, and then you ended up with what was just a massive short cover rally. And that magenta clearly staying over some of the MBI white spike that led to the move to the 50%. It filled it, actually went past it, but you created a beautiful short cover rally for those not paying attention or who didn't have the right readings to be able to see that magenta popping back over. And boom, sure enough, that broke out to the peaks. You're in a situation of secondary buy happening right at this particular point as it is now, and rising short interest within that. But DOC wise, you can see orange below, both red and green both spiking up higher, steel spiking, so everything all aligning with inflow of money, and that's the critical element right there. You can see from a 5-minute chart, that was pretty quick. It was over within the first half hour, and then just traded all the way across sideways. A little brief dip in the Asian session, which led to just more buying once it got going. And here in the European session, they're filling back just a tiny fraction of it, not much. So that's long and the short of it. As we get ready for the end of the month, I think more people were probably positioned out of the market than in, and they're going to have to start rotating back into it. All the signs look still good from an investment standpoint, and that doesn't mean that you're not going to get the periods of up and down in between. As you know, it's going to be a bit of a rocky road, and a lot of it is going to be on that politics side of things. And it looks like Trump decided to go with the path of least resistance to mitigate any market disruption. So that's the long and the short of it. Trade well. Anything relevant, I'll put it on our team chat. Have a good one.